Okay, welcome everyone to this special Wealth Builder Masterclass 0 to 9 Figures Raising Capital with Clarity, Confidence, and Connection. Today we have a very special guest, my good friend Marcin. I hope I'm saying your name right. He truly embodies what it means to raise capital with clarity, confidence, and purpose. Marcin is a 9 figure capital raiser, deal maker, and branding expert. After the 2008 crash, he raised an 8 figure fund and went on to acquire over 1,600 apartment units. As the managing partner of M1 Real Capital, he continues to build and acquire real estate portfolios while helping business owners and investors unlock their unfair advantage and build powerful personal brands. So definitely we wanted to learn today about the unfair advantage, which most people have, but they don't know. So welcome, Marcin. It's such a pleasure to have you with us today.
Yeah, no, I'm excited to be here. I think this is going to be a lot of fun, and yeah, I've gonna got a lot prepared for you guys here today, and yeah, I'm excited. Let's do it.
That's good. So before we get started, let's do a small little disclaimer. This session is strictly for knowledge sharing purposes and should not be considered as a legal, accounting, or investment advice. This session does not represent an offer to sell or a solicitation of an offer to purchase an investment or security. So, if you have any investment related questions or any accounting related question, please reach out to your appropriate parties like your CPAs, your attorneys, or whosoever responsible for that. But this is strictly educational purposes. And the other thing I wanted to mention is some housekeeping items. Please use the Q&A box throughout the presentation if you have questions, and we'll address all your questions live. If in case we miss any question, please reach out to me at vinky@loombainvest.com and we'll get the answers to you. So Marcin, welcome again. Stage is all yours. I know you have a good presentation. So take it away. You have good 60 to 90 minutes, whatever time you want it to take. So take us through your journey and share with us all the golden nuggets.
Sure. Yeah, no, happy to do it. Appreciate the opportunity. And by the way, if you guys have questions for me, put them in the chat. I can't chew and walk at the same time, so I'm not going to review the questions during the presentation, but at the end we'll take a look, and if there's gaps or things, and if you see things that you're like, what is that? Ask about it when you see it, because you will forget, and then you'll obviously miss the opportunity to ask the question. So I'm going to share my screen with you guys here, and Vinky, what I've done is I've actually taken a fair bit of time to incorporate AI into this presentation as well, because we use AI. I mean, we've been messing with AI for about 4 or 5 years now within our business. The equivalent of what you guys have with ChatGPT, we've had a version of that essentially for 3 or 4 years now. Pardon me, 2 years before ChatGPT, and there was all kinds of different LMN models and all kinds of stuff. So I just want to share a lot of that with you, because it is really uh, amplified what we do here with M1 Real Capital. So I want to share that with you guys as well. Vinky shared her disclaimer. I'll share mine. I am neither a securities attorney or a lawyer or an accountant. I'm just a guy doing deals. So anything I'm sharing with you, make sure you don't just be like, "Oh, Marcin said." No, no. Talk to your lawyer. Talk to your accountant. Make sure you do things legally, because I do as well. First deal I did was this. I bought a house. Pardon me, it was a semi technically. 2148 Shady Glen, and that was the address. And I did this with my best friend, and I learned the power of OPM. When we, me and my best friend came together, we raised money. We bought this. Pardon me, raised. Well, I put my money in, he put his money in, effectively at each other's OPM, and we bought this property. And despite my best efforts to screw it up, we still made 35 grand when we sold it. So, I was hooked. I think I was 19 or 20 at the time. Fast forward, I would pay for every VIP session, every event, every seminar, every conference. I flew all over the country to get in front of people, because I realized that this was the path I wanted to be on, but there was nobody in my network that knew anything about this stuff. So, my dad is a small business owner, mechanic. My mom's a pharmacist, good, hardworking people, but they didn't have the blueprint to building the kind of thing I wanted to build. So I paid to get in the rooms, couldn't afford it at the time, put it on credit cards, figured it out, just because I knew I needed that access. So Fast forward a year or two into that journey, I got recruited by a private equity firm, and we were working with Ken McElroy. Ken McElroy is the founder of MC Companies. Him and his partner Ross, they manage 2 billion AUM today. They have over 10,000 doors. Ken is somebody who's become a mentor, and I'd like to think a friend in a lot of ways. He's actually going to be speaking at my workshop next week in Scottsdale, and the relationship with him has been incredibly. Uh, just an incredible relationship. The picture you guys have here, this was the first large deal I raised capital for. This was back in '07 or '08. It was called, they own it to this day. It's called the Fountains at Sun City, or now it's called the Places. I think they rebranded it, but it was a 240 or 224 unit, 55 plus community in Sun City, Arizona. And I ended up raising about 5 million for this, which is a lot today. It was a lot 20 years ago.
Mhm.
And, I just remember thinking about the property, like, man, that's a lot of toilets. Like, it was just such a big thing for me. But my point is, I went from this to this in a matter of a few years. And if I could do it, all of you can have are doing it obviously here today. So I've gone on to raise multiple nine figures in private capital, and we'll talk about that a little bit later. But this is kind of how it all started. So my promise here today, guys, for the audience is I want to show you how to be able to raise millions and actually transform your business using AI. And even if you think AI is an accredited investor, don't worry. The whole artificial intelligence thing is not incredibly difficult. You just need to understand the format within which to use it. So, and for context, the strategies I'm going to show you guys work in any industry. For context, I've raised for multifamily, commercial, development, retail, operating businesses. We've done entities to buy out entity. We've done all kinds of stuff over the 20 plus years that I've done this. So I'm taking this on a first principles basis, so you guys can apply this whether you're building a debt fund, whether you're doing store, whatever you're doing, you'll get value from this presentation. Is my point. And even if you're just starting out, so you've done real estate, but now you're looking to raise capital, you'll get a lot from here as well. So, and for context, this isn't just my theory or Marcin being a great sales guy. We've actually systemized all of this. So our clients have actually been able, we've had over 1,000 clients go through our program, and collectively they've raised over 500 million plus in equity, billion plus in deals. So it's not just me doing this and being great at it. It's actually having the systems and the processes to have our clients replicate it as well. And all of these results were, most of these results were before AI. So AI will actually make life easier. Now, some examples, Candace and Corey, they did 9.4 million over a single weekend using our systems for a deal they were doing. Michael and Christian, they initially came to us with the Medical Plaza. It was a $7+ million deal. They needed a couple $1 million. We helped them systemize everything, and then they've been running since. Suman and Supanya, they bought their first 130 units, new to the country, and they were able to do it. So that was fantastic. Tyson Cobb, for those of you who know who Tyson, he did his goal last year was 15 million. He did 17.5. This year, I think he's on pace for 30 million. Again, we work with him on a weekly basis within our community. And Michelle Goheen, accountant by training, not a salesperson. She initially came to us. She needed a couple $1 million to build, pardon me, to pay for the student housing project that she was looking to do. And now she's moved on, and I think she's buying the whole community last time I talked to her. So the first thing I want to do with you guys here, and Vinky, if you're okay with it, is I want to address the biggest mistake that most real estate investors actually make. And let me know if you guys can finish the statement. Find the deal and the money will find itself, right? Put a
Mhm.
one in the
Will
chat if you
follow,
know that's
money
the
will
truth.
follow.
Money will follow, right? Put a one
Mhm.
in the chat if you guys know that's not true, right? So, by the way, if it was true, the richest people in the world would be real estate brokers, right? Because they find all the deals, technically. Yet, they're not. So, that's actually the biggest lie, in my opinion, in this business, because people tell you that, hey, if you have a great deal, you'll find the money. Maybe, but what they don't tell you is you might not actually get to keep that deal if it is truly a great deal. Because if you don't have the money, you're not getting the deal. You might get a wholesaling fee, an assignment fee, you might flip it to someone else, but it's not going to happen. So, biggest investors I know, I'm going to give you guys some examples, don't believe that. And the reason for it is because they want leverage and control. You guys have all heard the saying, he who has the gold makes the rules. Well, here is the top five biggest capital raisers in the world. You've got Blackstone, KKR, EQT, CVC, TPG, billions and billions of dollars of capital raised. And what's interesting is they raise billions of dollars first before they even know what deals they're going to specifically do. If you want proof, you guys have probably seen headlines like this before where it's Blackstone raises this, KKR raises this, TPG raises this. Well, when they make these announcements, you know they don't actually have all the money, right? Or pardon me, you know they don't actually have all the deals to spend to buy that stuff because they do it in reverse. They literally raise the money first and they allocate second. And then they find the businesses or the real estate to actually buy into. And the reason why they do it this way is because it allows them to control the risk. See, putting a deal under contract and then racing against the clock to raise the money, in my opinion, is the definition of risk because you're no longer focused on doing a great deal. Your hair's on fire now and you're trying to raise the money. Right now, yeah, you can have a team and some people do this and some people do this, but 9 times out of 10, everybody's focus shifts here and then it focuses here and then here. So it's a really difficult framework to be competitive. Plus, you're hoping that the money's going to come at the right time. And in my opinion, again, that's super risky and it's not a strategy. And yet, that's exactly what most syndicators end up doing. And I call it the PPM panic. Here's what it looks like. You find a deal. Vinky's laughing. I know she knows what I mean. You find a deal, you rush the legal, and then you scramble for the cash. That's peak panic mode right there, right? Where you're just last second, you're just like, man, like we got to get 300 grand. We're missing 2 million. Maybe we should give up our fees. Maybe I should sell a leg. Like you start getting desperate, right? And then that desperate energy is a problem because when you need money, that's when it ends up costing you the most. So obviously there's a better way. And my way is literally find the capital, let the deals come to you because people know you have the capital, and negotiate the best deals because he or she who has the gold makes the rules. That's how all the big boys do it. That's how Blackstone, KKR, they all do this because they want to have the leverage and control. Now, if you want to have that leverage and control, it's simple. You need to build a system that actually allows you to legally secure the capital before you actually find the deal. And when you have that in your place, when you have that tool in your pocket, you're actually going to be able to negotiate killer deals and massive discounts. I mean, on this call, if I was to ask you guys, I mean, put a one in the chat. If you had the ability to make all cash offers, how much more aggressive would you guys be? Crazy, right? I'm going to show you guys a case study. Because literally, this is exactly what I did with this last deal we bought a while ago. So this property is 144 units down in Houston, Texas. The seller initially wanted 16 million plus, had it on contract for 16 million plus multiple times. They couldn't close. We closed at $11.1 million. So who here wants to see my secret proprietary process that made it hard for this seller to say no? Step one, you guys ready? Send a screenshot of your bank account with your offer. That's it. When you have the money, when you can send a screenshot with your bank account with the offer, you get people's attention. And seriously though, like when you install a capital raising system into your business that allows you to raise capital before you have a deal, you can actually do this. And it's going to work for you whether you're raising your first million or your next 8-figure fund. And it's actually going to help you set up an environment with your investors. Your investors will show up to your meetings, not thinking if they're going to work with you, but they're going to be thinking about how much and when they're going to invest, not if they should. And by the way, guys, for those of you who are like, oh, well, that's hard money. No. I'm not talking about hard money. Hard money lending is not raising capital, by the way. I think it's BS. Anybody who tells you raising money is hard money lending, it'd be like me saying, great, I just raised 100 grand from Amex because he just sent me a new credit card. Like that's not raising capital. So I'm actually talking about raising equity for projects so you can actually build your balance sheet and negotiate. Now, all of what I just laid out for you guys here is the vacation. It's the outcome. It's the thing you guys hopefully want to aspire to, because when you can buy deals and negotiate 4, 5, $10 million discounts on the purchase, you make your money when you buy, right? So now using AI and what I'm going to share with you guys, all of this is going to lock in. And that's exactly what Pinky and I wanted to share with you guys here today. Now, real quick, if you're like, who is this dude? Why is he so confident in what he's doing? Well, this is who I am. So, my team and I have done over 3 billion in deals. I've raised multiple nine figures in private capital. We've done retail, we've done institutional. Our clients have done over a billion in deals. And most importantly for you guys, I'm literally the only guy in this space that's literally trained RIAs, 1,000+ RIAs across North America, and how to do this professionally within their business. So people who are in the business of just raising money, we've raised money through institutional and retail channels. And one of the things, one of the value adds I offered, because we were so good at doing this ourselves, is I taught their salespeople, their RIAs, how to raise capital. And I did it for free because they raised money for us. So that was a really unique skill set that I think is worth paying attention to for you guys. So let's get into it. So to have investors lined up at your door, pre-sold, working with you, you need to nail these four things. I call it the core four. Number one is your unfair advantage. Two is have a qualified lead generation system. Three, master having what I call $1 million meetings. Four is having the systems to allow you to buy back your time so you're not doing $20 an hour tasks. As a capital raiser, you're worth multiple thousands of dollars per hour. Don't ever forget that. So what you spend your time doing is going to dictate your level of success. So part one is packaging your unfair advantage. Here's the unfair advantage that I need you guys to really internalize. It's composed of three things. The first one is your story. So how do you structure your story? By the way, all of this is in my book. If you guys want to download it, the Unlimited Investor Leads. But I'll tell you here, origin. Your story can be based on your origin, on the struggles that you've gone through. It could be credibility based or vision based. So those are the four different components. I don't have the time to dig into all four, but it's all in the book if you guys want to dig into it. The second part of your unfair advantage is your why. So you have your personal why, your personal goals, your priorities. Your story has shaped the kind of person you are, things you believe, things you stand for, things you stand against. Those are your personal whys. The second form of why is alignment. So how do your personal whys align to your potential investors? It's really important that you communicate that as part of your unfair advantage so that people understand why you do what you do. People need to understand your motives if they're going to invest with you, and they really need to understand why you do what you do. And by the way, if it's as simple as, hey, I worked in engineering or tech for the last 15 years. And the reason why I got into multifamily storage, commercial, whatever it is because I was looking for a way to get out of the 9 to 5 so I didn't have to sit in traffic 3 hours a day and so I could spend more time with my family. Like, it doesn't have to be this fancy Steve Jobs-esque Apple why I started this new business. It's very simple. Your why, actually, the more simple and relatable it is, the easier it is for your clients to understand, oh, that's why she's doing that, or that's why he's doing that. Really important. And the last piece, you guys ready for it, is evidence. So in other words, your story plus your why multiplied by evidence. Now, what is evidence? Well, evidence can come in a lot of different forms. I call it my 6 E's. So number one is effort. So proof of effort. So what effort have you put in to demonstrate to me that you're credible? Second one is experience. And by the way, effort could be as simple as, hey, I've underwritten 100 deals before I did my first one. That's a form of effort. Experience. I've been a real estate broker for the last 12 years. I've been a commercial lender. I've been a cardiac, I was going to mess this up. I've been a certain type of surgeon for the last 20 years. Like, whatever your level of experience in life is, there's experience. Established methods. So maybe because you run a property management company, you have a very specific way of looking at screening tenants. Maybe because you're an asset manager, you have a specific way of governing assets. Maybe you're really good at, there's established methods that you may have developed through the course of your career. Those are forms of evidence. Execution, obviously being able to show people things you've executed on, and results is self-explanatory, things that the results you've been able to generate based on certain different activities. And then the last one is endorsements. So who out there that I'm familiar with would endorse you, or endorses you publicly, obviously, preferably, or at a minimum, who is comfortable with you being in their proximity or things like that. Now, by the way, you're not going to have all of this out of the gate. I certainly didn't when I started when I was in my early 20s, but now going into my 40s, I can check a bunch of these boxes. And my point is, you guys can build your evidence, you can stack your evidence to that then reinforces your story and your why. And guess what? When you combine all of this, that's what ends up creating what I call your unfair advantage. Now, here's the thing, mapping out your unfair advantage does take time. And for context, that's why our clients pay us good money to do it for them, because this process is quite a process. We go through 32 or 34 steps to actually map out our clients' unfair advantage and create their full unfair advantage marketing system. But it's worth doing because whether you do it on your own or with us, because it's literally the highest form of leverage you guys can create for yourself. And by the way, no, it's not dumping onto ChatGPT and seeing what happens, because I'll tell you, tell you right now, garbage in, garbage out. If you guys ever talk to ChatGPT and you're like, that's not true, like that's not a real thing. It's called hallucinations, right? Like it's not just talking to ChatGPT. There's a ton of things that go into it internally. Like for context, I told you guys we go through 32 steps for our clients, and the real benefit is that we've already done this for over 1,000 plus people, pre-AI, even post-AI plus. And because of that hard labor, that hard work, all those frameworks, that knowledge base, that content, we've been able to create something that's tremendous for our clients, that essentially allows them to attract their investors on autopilot. Now, on this call, I want to do something special for you guys, so at least you can get started with this on your own. And I want to show you how to do this yourself. But ultimately, I need to sell you on the fact that you need to incorporate this in your business, either on your own or with us, because ultimately, whether it's building your authority online or social media, whether it's making all your existing marketing plug and play, for those of you who have virtual assistants or assistants in general, it's the blind leading the blind. You can't abdicate your personal positioning online. So putting it together first, packaging it, and then giving it to somebody to execute on administratively is the right way to do it. That's what needs to happen. And again, that's what gives your VAs and your admins those next steps. And then finally, making your direct outreach super simple, which is important. Have you guys ever seen like content from people from like, I mean, you see a guy on a podcast and then he's on 3 or 4 different podcasts, but somehow the message is always kind of similar and it brings you back to a similar message? That's not by accident, that's by design. That individual had specifically packaged what I call your unfair advantage in a way that regardless of what medium you noticed him or her on, it would bring you back to a similar impression of them and a similar next step that you would want to take naturally and feel like it's organic. That's the beauty of having an unfair advantage dialed in, because there are no random discussions. They appear random, but they all come back to a central theme. If you're raising capital, you need this, because if you have a bunch of random interviews and random podcasts, I mean, who cares? Like I guess it's better than nothing, but it's not connected. And by the way, this works because it's authentically you. It's 100% you. Now, for you to build your unfair advantage, there's going to be 4 basic things that you guys need to incorporate, okay? Number one, your unfair advantage has to position you as high status. That is non-negotiable. You have to be perceived as high status, because guess what? We never invest with people that we perceive below us. When you do give someone below you, as crude as that sounds, money, that's not called investing, that's called charity. And I'm not trying to be crude here, guys, but it is true. Ultimately, when you invest with somebody, you have to perceive them as an authority, as someone as high status in a particular area. And your unfair advantage does that for you. The second piece is you have to perceive them as someone who's a thought leader, somebody who has unique opinions on a specific topic that they're obviously an expert in. The third one is your unfair advantage has to demonstrate competence and a personal experience tied back to why you're worth listening to. And then finally, all of this working together starts to build trustworthiness. It builds this implied trustworthiness. It's why, for example, people that watch my YouTube videos for a few hours or whatever it is, when they hop on a call with me or my team, there's this level of familiarity that you can't fake. So having that in place, all the content I create is curated on purpose to create a very specific journey for the people that are following. And that's important, because you don't, because if I created a cooking video, I can guarantee you no one's going to watch it, as much as I like to cook, as much as my wife likes me to cook. Um, yeah, she does like me to cook. So, and here's the thing, guys, before AI, you'd have to literally hire a copywriter or a marketing agency and pay tens of thousands of dollars and hope that they do this right. I've been in this business 20 years. This will be our ninth fund now that we're going to be putting together in the next little bit. And I can tell you, I've spent a lot of money on a lot of marketing key people, and I've thrown a lot of proposals out the window because it was just garbage. And today, the beauty with AI and the right prompting and the right processes, you can actually do this for yourself in a few hours with a few prompts. So I'm going to give you one of the prompts that will probably move the needle for you further than anything else has so far. This is the beginning of your unfair advantage. I don't have the time to go through all 32 chunks and components of it, but this right here, at a bare minimum, having this as a prompt and incorporating this into your unfair advantage will give you a massive lead ahead of anything else you've probably ever done before. So that's that there. And I can tell you definitively, this is the formula that I've used to plug into countless environments and rooms and people. Now, a little bit of sidebar. For you to actually be able to build a quality network quickly, that unfair advantage needs to be able to sell for you 24/7. So this is where most people actually lose things when they lose their investors, because what they do is they focus on the deal, and most of the time they focus on the numbers. I call it using your deal as a crutch. So you talk about things like projected IRR, cap rates, ROI, equity, multiple, vacancy, all this stuff is important. I'm not saying this stuff's not important, but I can tell you that when you lead with the deal or you use the deal as the crutch, it does two things for you, from my experience. Number one, it attracts your competitors and people who just want to learn about real estate. So you're literally going to have your competitors all looking at your stuff, which is one thing. And then you're going to have a whole bunch of people that want to be like you, that are just going to be like, they want to learn the thing. So they're going to clog up your funnels. They're going to fill out your interest forms. They're going to want to pick your brain. They're going to want to go for a coffee. And there's nothing wrong with that. But if you're in the middle of a raise, it's incredibly frustrating, right? So, and the second thing it does, it actually turns you into a commodity, because you're then teaching the market to compare your pretty spreadsheet and best guesses against other people's pretty spreadsheets and their best guesses. And you end up creating this environment where you're competing on a theory of whose underwriting is real in the future. And again, strong underwriting is important. There's people that do this wrong, obviously, but my point is, neither of these situations are great, which is exactly why nailing your unfair advantage creates that's, in my opinion, the single biggest leverage point you can do for your business, because you can't commoditize me. Because ultimately, it's either a function of, do you want to be a part of what I'm doing with my team or not? Because all things being equal, people want to work with people they know, like, and trust. All things not being equal, they still rather work with people they know, like, and trust. So if you guys are playing the game the other way around, where you think the deal is going to convince them, you're already behind. And that's one of the biggest misconceptions in this space. So let's fast forward here. Let's assume your unfair advantage is dialed in, okay? And we now can leverage that. So where are we going to leverage your unfair advantage? Your qualified lead gen. That's exactly what that's going to do. Now, just to give you guys a little evidence, we took a random snapshot, and yeah, we get about 2,000. Now it's more, but we get about 2,000 qualified investor leads coming in on a monthly basis within our ecosystem and our platforms. And full disclosure, we do free, we do organic, we do pay, we do all kinds of stuff now, but it wasn't always this way. But the point is, it works. So my full roadmap, just to give you a picture, is something like this. This is one of our funnels that we have internally. So now that you've memorized it, my point is, you guys take a screenshot of this, but I don't have the time to dive into all these details right now, and I'm going to give you as much of this as I can. But the point is, I couldn't build this without my unfair advantage, because every step of this process only makes sense because it's me. So if you guys do want this full process and you guys do want to engage in this process to figure out how to build this for yourself, go ahead, scan the QR code, and you can actually just book a call with my team. So we can actually see how to install something like this within your business. Again, you're not going to get the hard sell. Honestly, we don't have the time. We have thousands of people coming in. We accept a very small percentage. But at a minimum, if you want to book a call with my team to see how we can help you kind of incorporate something like this into your business, into a really easy flow, you can do it now. The application takes 90 seconds. Based on how you answer the application, you may or may not be able to book a call. So sorry about that. Not everybody's a fit. but at a minimum, you'll get the resources. And when you book your call, you'll get a copy of my book, Unlimited Investor Leads. This was the number one bestseller on Amazon for quite a while. It still sells really well, and we'll give you a free copy of that if you're interested. So the other thing that'll happen because of the theme of AI, and Vinky, I didn't tell you about this, but when you guys book your call, Charlie, the Capital Connector, will actually reach out to you. Now, Charlie, as you guys can tell, is an AI. The thing about Charlie is he actually knows a lot because I've personally trained him. He's been trained on over 1,000+ fund managers, syndicators, and operators. I've trained him, and he'll personally reach out to you to help you diagnose your constraints before the strategy call with our team. So, in other words, you'll connect with Charlie. He'll ask you a few questions. He'll help you diagnose where your gaps are so that that information is relevant for the call with our team. So you can actually jump into the conversation with a little bit more of a meaningful impact dealing with your business. Exactly. So you guys can go ahead and book that call, and that's it there. Now, how do you kind of keep track of what's actually working? Because I'm sharing a lot of things with you guys in terms of the process, right? So one of the other things Charlie knows about, and one of the other things we focus on here is called the funds first formula. And again, I don't have the time to get into it, but this is how you guys diagnose where your constraint is in your business. So me, I've built multiple businesses. How I decide what to fix is based on what is the most broken that has the most negative impact to my business. So this is a way for you guys to assess this when you're raising capital. The first constraint is number of contacts that you add to your list. The second is percentage of qualified contacts, book meeting percentage, show rate, so the amount of people that say they're going to show up versus how many actually show up for your meetings, closing percentage, what percentage of those people write a check, and then finally, what is your average commitment size? So these 6 components, I'm just going to give you guys an example here. Let's assume you have 1,000 contacts that you can add to your list. And let's assume, just conservatively speaking, 20% of those people are qualified. Many of you, that number is higher because you're already operating in target-rich environments where you're consciously going after people that are qualified, but let's assume it's 20%. And let's assume about a 35% of those people book a meeting, which is pretty KPI standard in the business. And about 75% of those people show up to the meeting. So in other words, you book 70 meetings, 52-ish of those people actually show. Some people cancel, some people no show. And let's assume 1 out of 5 of those people eventually become investors with an average check size of 100K. So what's the math? It means there's $1 million there for you. Great. How do we actually assess where to move the needle? Well, without going into too much detail, I'm just going to move the needle on 2 components by 10%. And by moving those 2 components by 10%, your commitments jump by 2.3x. So the moral of the story is knowing where to look and knowing where to actually deal with the issue is the number one constraint most of you guys have, not knowing how to diagnose your constraints within your business. Salespeople think, I just need to close more people. Marketing people think, I just got to get in front of more people. Systems people think, well, we just need more follow-ups and we need more CRMs and da, 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 da. Like everybody's trying to solve the thing they're an expert at. But when you actually take a step back and look at what your constraints are in your business, you'll actually know what moves the needle the furthest. That's one of the things we can help you resolve on the strategy call. Now, like I said, most people do this backwards. They literally just spend their money on stuff. And by the way, I've paid for things like this too. It's not bad. It's just if you're spending money just to spend money, hoping to find investors, it doesn't just cost you money. It'll cost you time, your relationships, and your personal peace. I mean, and you're going to feel like like this person here, right? So, and of course, the opportunity cost of a deal that doesn't get done, that you've wasted money, lost escrow, like it's just painful. Now, why am I so fired up about this? Well, for context, 15 years ago, so I started in the business about 20 years ago. We were working with MC, we raised a couple $100 million with them. And then I went out on my own and I started my first fund. It was about 15, 16 years ago now. And it took me about a year to get this fund off the ground. I had no idea what I was doing, like no clue. And I spent over 150 grand on it. And in some ways, I'm glad I did it because it gave me the context. And that's kind of why I'm fired up. And I don't want you guys to have to repeat this. But I mean, fast forward today, like that last deal I did where we raised the money before we needed it. I raised that money for less than the price of a used car. Nothing. We paid no like next to nothing in fees or costs or events or commissions. And I didn't have to meet anybody one-on-one. We did it all remotely. And we did this before AI formally. And now with AI, you can do all of this stuff for a fraction of the cost. And of course, I'm not unique. A lot of you that have raised money before, you've probably spent money on that you've never gotten back on events, on ads, on funds, and all kinds of different stuff. And it's not just that you're doing the wrong thing, but you're also doing it in the wrong order. So I want to skip all that. I'm going to show you guys how to rearrange things using AI so you can actually get better results here. And so you guys can start building stuff like this within your own business. Now, quick hack for you guys. If you want to start putting something like this together on your own, you can do it. There's a tool called Agent GPT. It's a
Stop right there. Yes, let me
Oh,
get
there
that.
you go. Okay. Okay, so there's a tool here, guys, called Agent GPT. It's essentially an AI project manager. And I just took some screenshot. I mean, I created one called, by the way, we use a lot more in-depth stuff, but if you wanted to do something just to start, this is something. You could literally build me a capital raising plan and it starts to go to work. The challenge here, guys, there's always a string attached, right? When it comes to the biggest problem with AI, garbage in is garbage out. And that's actually the biggest problem with AI is there's literally people that get paid hundreds of thousands of dollars. They're called prompt engineers. And all they do is they mess around with AI all day. And, we're no prompt engineers, but because we've done this thousands of times for our clients and ourselves, there's a very specific sequence and set of steps and directive that we need to go through to create a package for us and our clients, both our marketing team, our copy team. But at a minimum, you can literally you can start this. Sorry, that was a different thing that I had. Now, let's assume you have your unfair advantage, you have your lead gen system, and you have qualified people to talk to. So what do we do? What do we do next? So this is the $1 million meetings. This is the thing that I've taught to thousands of RAs over the years. So remember that I'm going to use this as a case study. Remember that 144 unit that I bought at the discount? Well, here's the exact framework we used. I call it the easy method. Easy stands for E as exclusive. So what are three points that make your opportunity stand out? So in the context of this asset, we were buying it for less than half of replacement cost. Rents were 30 to 40% below market. And the asset down the street sold for 94 or 96,000 a door, and we were in at 77 a door. So it was like check, check, check. Okay, great. Interesting. What else? Abundance. So how many people do you have in your list, in your database, in your network that you have access to that would want to hear about something like this? Whether you're speaking on a stage or whether you're sending an email or you're calling somebody, be like, hey, Vinky, so glad I got you on this call. Listen, we're about to send this out to our network. We got a newsletter list of about 13, whatever your number is, 1,300 people. And, I just wanted to get this in front of you before everybody else sees it. It demonstrates abundance, it demonstrates leverage, and that you're not needy. This is going to happen regardless. I just thought you might want to come. The next piece is scarcity. So in other words, the constraints of time and or capital. So my challenge, Vinky, is we're only looking for another $3 million. Our average client on the last deal was 250,000. So realistically, we're only looking for another 10 to 12 potential investors on this. By the way, guys, always tell the truth, never lie, always 100% transparent, disclose, but ultimately there's always a way to create scarcity. And finally, why? Your allocation. So, hey, back and forth conversation. Hey, Vinky, so look, it sounds like something that might make sense for you. I'm curious. I'll send you the data room, but if everything checks out, is there an amount that you consider placing into this? Right. So there's multiple ways where you can package and ask for the commitment in a legal, compliant, no pressure, no nonsense way. And the last piece I want to cover with you guys, and then we'll kick it back to Vinky, and if there's some Q&A, I'm happy to take it, is the actual systems and scaling. So if you guys have gotten a lot of value from the first three, this last piece will kind of bring it all together for you guys, because I can tell you that as with most things in your business, you guys always have a few options. One, you could literally do nothing, be like, hey, this was a cool video, but I'm not going to do anything about it. Two, most of you guys aren't like this. Two is you can do this alone and then start to navigate the path and figure it out. Or three, do it together, do it within a community where you have support, expertise, a community where you have people that you can literally plug into that have walked the path that you're looking to go down. And I can tell you guys the result of doing this business for over 20 years now. And I've personally invested over $1 million in hard costs to figure this stuff out. And I don't mean like $1 million in potential like revenue or potential stuff. I mean like money, like my credit card is burning a hole in my pocket every day, like that kind of thing, right? So for example, that was our ad spend yesterday. We spent 5K. We spend 4, 5, 6K a day on ads every single day. That's our business. So, and the reason why I'm comfortable to do it is because my team and I, we've obviously done a fair bit of business, but because of the free versions of everything to the paid versions of everything that we've now developed, I've literally developed a solid understanding and intuition of what does and doesn't work in this business. Which actually brings me to the last piece here, which is I'm sure you guys have hired the wrong person once or twice, right? So you know how much pain it is to have that for you and your business. One of the things within my business, one of the things that have actually allowed us to have the level of success that we have is not just because of my experience and knowledge, but largely because of the team we've built within our organization. Got 30 some odd people within the team. Everybody knows where they're rowing. But I can tell you right now, it took me a ton of trial and error to figure this part out, like a lot. Literally, this is a real picture of me trying to figure out who the right employees are, or who the right partners are, within the business. Like it's expensive. I've spent a lot of money to bring in the wrong people, wrong staff, wrong employees, both in payroll and not even counting opportunity costs. So imagine for a moment that within your business, you could hire an employee that knows everything about the business, knows exactly what your perfect client looks like, understands how to qualify and bring you the best opportunities, works for free, never takes a day off, and is on 24/7. I mean, Vinky, that sounds pretty good, right? You
Yes.
could, if you could have someone like that. I mean, what would an employee like that be worth? They'd obviously be priceless. And I'm obviously speaking about AI, but the problem with that though, guys, is if you don't know what to do, you can't train someone how to do it right. Again, like with the prompting, garbage in, garbage out. Just because you want a certain type of result, but you don't know how to get it, and you're not connected to people to know how to get that result, you're going to be spinning your wheels for a very long period of time. So I can tell you the solution is simple. Number one, get clear on your unfair advantage. That has to happen. That's non-negotiable. You have to get clear on your unfair advantage. Number two, once you're clear on your unfair advantage, you need to train your team, either a combination of real humans or AI, and actually have them run the playbooks that actually work based off your unfair advantage. That is the highest form of leverage you guys could potentially create. And number three, when you're ready, plug into a community already doing it at scale. I can't tell you how many workshops and masterminds and communities I'm part of, because for me, it's too expensive not to pay for speed. I'd rather just get the result and not have to go back and forth. And that's always been true, whether I was a 20-year-old kid and I bought VIP tickets to conferences I had no business going to, or now in your 40s, you're paying for Rush Legal, Rush this, Rush all the different access points that I need. It's paying for speed, and that philosophy has served me well. So for a little bit of context, guys, in our business, we spend literally 6 figures plus a month. Plus, I did the math. It's at least 4,000 plus hours on a monthly basis using AI. So if you're alone and you're spending 40 hours a week, that's your level of reiteration is 1/120th or 1/130th of just that example. And now today with tech and things changing as quickly as they do, I mean, it's wild. Like Agent GPT, ChatGPT, they put out updates every week now. It's almost impossible to keep track of this stuff for most people. So my whole mission within my business, and hopefully I've served you guys to some extent here, is to help you guys find the most effective and efficient way to find investors so that your clients don't have to waste their time. And look, I've covered a lot here, and obviously, guys, it's just not going to be possible to cover everything else. I'll take some questions, but there's so much more to this, a lot more. So if you guys are sitting there and you have any of these issues, you just got to hop on a call with the team and see if we can help you guys. So if you're currently not getting enough leads, if you're not converting enough of those leads into clients, or you're in meetings with the wrong people, or you feel like you're having great meetings, but people just don't invest or don't write a check, or you keep trying to shift between strategies because you don't know which one is the right one, you need to go ahead and just book a call with my team. Look at the strategy session again. There's no hard sell. The application is required. You may or may not be able to book a call if you can't. I'm sorry in advance. But there's a specific type of person that we can help, and for everybody else that we can't, we have free resources that we share within our community. So, and yeah, if you book a call and you're actually able to book a call, you'll have a chance to connect with Charlie, the capital connector, and I'm quite proud of the work I've done with him here as well. So that's all I got, Vicky.
Thank you
Happy to
so
take some
much,
questions.
Marcin. Oh my God, that was like really, really powerful presentation. And I think like really good takeaways for everyone. So I'm gonna break it down, the few points that I learned from you, Marcin, over and
Sure.
over again. I think multiple meetings that we had and multiple times we talk about multiple things, but it boils down to I think my favorite and your favorite is the unfair advantage, because whatever you do in your life, and a lot of people are not aligned with that. So getting the alignment. So I'm going to connect the dots for everybody whoever's here in this meeting. So unfair, to find the unfair advantages, you just like kind of need to turn inwards and need to figure out who you are, where you're coming from, your values, your norms, what your daily routines, what you do. You have to see yourself kind of, to figure that out. And the other thing that he mentioned, Marcin, was garbage in, garbage out. So until unless you know who you are, you won't be able to define yourself or take you to the next level where you want to be. By the way, I'm plugging it in here. I just wrote a book with the publisher. The book is going to be coming out in next couple months. It's about redefining yourself, and every moment you have a chance to redefine yourself, and to figure out who you are right now and who you want to be. And that's what exactly Marcin is talking about. Otherwise, if you're using the AI agents or GPTs or whatever you're trying to create, is garbage in, garbage out. Or in other words, some people think they're really smart. They can package it really nice and shiny. And I think Marcin has another slide where he talks about garbage in Gucci bag. I think I really love that when he shared that with me. Because it happens and we see that all around us happening. And number three, he said, is doing it backwards. And I agree with him 100%. That's a good takeaway, because everybody is doing backwards until unless they understand the process. Because, like he was saying earlier, when you have the deal, money will follow. But it does not happen. And there is a question actually that I wanted to address at this time. Somebody was asking, Marcin, when you're talking about, doing it backwards or money will follow when you have the deal. So without a project deck, the only structure that comes into mind is a fund to fundraise that would require a securities license. Please correct me if I'm mistaken. So can you guide people, what you meant by, like you can start the race before you have the deal. So you're preparing yourself something bigger and better already.
Yeah, I mean, you can do a blind pool. You can do a blind pool. You can do a pool where you identify the first asset. There's a lot. Again, I'm not a securities attorney, so I'm not going to give anybody in particular advice. But I've been doing this for 20 years. There are multiple ways to this. I was going to use an analogy to skin a cat here. The problem is a lot of people are just using the syndicator model. Which, by the way, if you have a big network and a big list and all that stuff, a lot of people syndicate and they make it work, but the challenge is that when you're negotiating a transaction, if you can't show proof of funds and your whole thing is, oh, don't worry, we're going to raise the money. How are you going to negotiate a kick-ass deal? Like you're not going to be able to. Like real estate is you either give the seller terms or price. Like you're not going to get both, right? Like you're not going to chop them off at the knees on price and then say, oh, by the way, I need 6 months to close. It's not going to work, right? So how do you give the seller confidence to give you a better price as you show them the bank account? How do you legally raise the money? You can set up a fund structure. You can do a blind pool. Talk to your attorney about that. There's ways to do it. There's different risks. There's different things, but ultimately, that format is a format that I think whether you start there or you end up there, look at what the big boys do. There's a reason why they run the playbook the way they do it.
Thank you for that. And then the last takeaway that I have, and you said do it with the community because a lot of people they think they can do it themselves, and I have learned from my experience too. So when you collaborate, you go much farther, much faster, and that's the tagline I say over here. So do it with the community, and if somebody has already figured out, how to do everything or how to connect the dots, you do not need to reinvent the wheels. Just ride that bandwagon and then just, kind of accelerate your career. That's the way I look it up. But I'm going to ask you this question over here, Marcin. You have built multiple eight-figure funds. That's how I understand from you. And then you've been helping a lot of individuals, countless individuals in Canada, in US, all over. So looking back, what are the biggest lessons you have learned about building lasting relationship with investors? I think that's the far most thing that people suffer with. It's not about the deal, not about the pitch deck, it's about building the human one-to-one connection or relationship so you have that trust. And this could happen and instantaneously when you're meeting somebody, or it might take 6 months, a year to do that. It all depends, but it all boils down to you, right? So I wanted to hear your opinion. How did you do that and how you become so successful in this?
So the biggest hack for I like to always package everything as a mental model because it's easier to remember, right? So most people I call it the three P's, and they might do the three P's, but they do it backwards. So the first P most people focus on is the portfolio or the property. So in other words, hey, here's my great deal, here's my IRR, here's my projections, here's this, here's all this stuff, right? That stuff's important, but I actually do it last. So most people do it first. The second thing that I most people then maybe they get into is they get into process. So they'll say process. So they'll say something like, well, here's our underwriting, here's our due diligence, here's our property management, here's how we do this, here's how we do this, all that stuff. All super important. And then the last thing they lean into, if they remember to do it all at all, oh, by the way, here's John, he runs asset management, Jessica's our acquisitions, and Justine does, the asset management as an example, right? So I do the opposite. I focus on people first, the people involved, because essentially people write a check to people. They don't just write a check to a deal. I mean, the deal is important that it's there. Obviously, a good deal is there. But again, people invest with people. So who are the people on your team? And whether it's real estate or an operating business or running lemonade stands, really there's three legs to every stool. You have the asset management, you have the acquisition, and you have the capital. Those are
Mm-hmm.
the three legs to any business. I don't care what kind of business you're building. Those are the three legs of the stool. So at a minimum, who are the people involved in the three legs? Now, initially, if it's you, that's fine. Then you show how it all kind of fits together. But eventually, hopefully, you have somebody that you can point to that covers each one of these, and having that emotional and awareness over how that individual is presented and how that person fits into the whole thing is the starting point, because people are most interested in people's stories. So that piece is the beginning. Then how do those people come together, and what are the processes that they use either for turning assets around, for property management, their unique way of looking at assets, their unique way of looking at markets, their strategy, all these different components. And when you lock in one plus one here, that portfolio or the property is almost like the natural conclusion of the conversation. It where and that way you decommoditize yourself, because effectively it doesn't matter what deal you do, because most people have psychologically said, you know what, she's investable, he's investable, I like how they look at things. And then when the deal shows up, it's like, well, yeah, of course they're doing that deal because it fits here and here, and it locks in.
That's true. It's the trust that you build day one. That's very important. So let me ask you another question. A lot of people, who are starting in this journey, especially on the capital raising journey, sometimes they struggle. They feel like, oh, I do not have the track record. I do not have this or that. How do I start? Right. And then they don't feel comfortable going to the investors, or when they are not comfortable themselves, they are not able to make that connection, the connection that you're talking about, because the eventual goal is, kind of partnership somewhere, somehow, and getting the money on the table and running with the deal, right? So when you're not confident yourself, you're not 100% there, you're not able to give your 100% to somebody on the other side of the table. And I've seen that in my experience. And then I wanted to hear your viewpoint and from your experience, what have you learned?
Well, I mean, when I got started in the business, I went to work with people that had the experience and the track record. And that's what, if you don't have the track record, then you need to work with somebody that does. It's really that simple. I don't think it's one thing to invest your money speculatively. It's another thing to ask people to invest theirs. And that's just more of a moral, that's more of a moral line that I have. Technically, you can do whatever you want, but if you don't have the experience and you don't have the track record, you need to either A, humble yourself, or B, just concede the fact that you need partners. You need people that know things that you don't know, and go work with them, go work for them. At a minimum, go volunteer for these people because you have to build up your credibility. I mean, I was in my early 20s. I knew that I didn't know. So working with the PE firm that we raised money for MC was a great hack because it immediately plugged me into an environment of people that knew what they were doing, and that set a different baseline for me for everything I tried to do after that.
Yeah, I agree on that 100%, I would say. But one thing I wanted to add to it, when you're leveraging on other people's experience, that's their experience, and your experience is you're vetting them. You are going, the complete whole 9 yard and trying to figure out who they are, just like complete due diligence before you're bringing it to your investors. So that's what
Yeah,
your
yeah,
value
well,
that you're adding to the investor.
yeah, well, yeah, like so Ken's partner, Ross McAllister, he's the builder. I was talking to him a little while ago, and he said, I interviewed him at one of the properties, and I think, I forget if it was on camera or off camera, but he said to me, he goes, so I asked him, I said, Ross, so after, 30 some years, what have you learned? He goes, if you had to tell me one thing you learned, he goes, I'll tell you this, it's really easy to get into a mess. It's really hard to get out of one. So what he meant was obviously I think he was talking about development, but you can take that for partners, you can take that for deals. You could like don't rush into a transaction with partners just because you want to do your first deal. Take your time, work with people that have the same values, the same vision, the same mission. Like, do you align with these people on a personal level? Because if it's just a monetary conversation, I can tell you business partnerships are like marriages. They're
It is.
it's serious stuff. So,
That's true.
don't be too eager just to jump into your first deal. But when you do find the right people, don't mess around, don't hesitate. Just
I know. I think I really am gonna go back to your unfair advantage. That's the main thing, knowing who you are. So you're coming from the place of trust and truthfulness, and that's gonna help you build like stronger connections. And you're able to see through people too when you know where you're coming from. So there's a question in the chat as well. The cost of holding idle capital can be high, and investors typically expect a return while you are still sourcing a deal. How do you approach raising capital without a specific project in place? And what type of return are you proposing without a supporting pro forma?
Yeah, so you guys are asking a lot of how-based questions, which is fine, but the challenge with what you're asking is I have no context for you, your ability to execute, your team, what you're working on, that kind of stuff. But generally speaking, guys, like the, the, these are, I'm not saying this isn't important, but these are things that you can work through as you're going through the process. There's a lot of ways you can resolve this. You can have you can do rolling funds. You can do a fund that it's an open and closed date. You can have a savings. Talk to your lawyer about the different options. There's a lot of ways to do this. Setting up a fund or a closed fund, there's a lot of different ways you guys can manage this. I would focus on the bigger picture, which is the opportunity cost involved with not doing it is really the bigger thing. Because a lot of the questions you guys are asking is, are you playing not to lose or are you playing to win? Because if you're playing not to lose, don't set up a fund. I'll tell you that right now. Like if like playing to you have to play this game to win, to play at all. And if you're playing with defense, you're never going to win. And that's just a thing for life in general. Like if you're immediately going into something and you're trying to like figure out how not to lose, then you're never going to have time to focus on how to win. So
That's
I'm not
true.
saying
That's
I'm
true.
not saying you don't pay attention to these things, but these are the nuances that your lawyer can help you work through. Ultimately, give yourself a window of time. If you don't deploy the capital, give it back, and maybe that's part of the risk. And why would an investor take that risk with you? Well, potentially because you can do a sweet, you can do a great deal when you have cash on hand. Everybody inherently understands this,
And I
right?
think the biggest hesitation is being failed on something. That's the reason people don't do it. But the thing is, I would say fail and pass or, succeed is just like all in your mind. It's all experience, good or bad, If you're trying to, unless you have the experience, you won't be able to get to the next level in your life. That's the way I look at it. So one
And
last question go ahead.
And I was just going to share in my experience too, because we've had a lot of clients go through this process. It's funny what ends up happening is once you start building your fund, uh, it's funny how deals somehow just like magnetically pull to you anyway. It's
Hmm.
just your intention. Like you're saying, I believe that your energy, it carries, right? So when you start moving in the direction that you want to go, even before everything is done, and again, guys, follow the rules, follow the laws. You can't solicit capital without the people. You can't, definitely talk to your lawyer because you can't just raise money like without the paperwork. But my whole point is when you start putting the paperwork together, the world somehow manifests and things start coming together where literally you get, the deal of a lifetime suddenly shows up and you're already in the like it just things will start to lock in for you guys, but you have to take that first step. And it's funny, you might actually start thinking you're building a fund, but you end up doing the syndication anyway because the deal somehow showed up. So effectively, it's not a blind. Like there's all kind, but the point is to get started. And by
Exactly.
the way, building your personal brand online doesn't mean you have to go raise money. Actually, the more you just teach and give and not expect anything of anybody, once you have your unfair advantage, you know how to package yourself publicly, whether you're a mortgage broker, whether you're a real estate agent, a construction worker, whatever the heck it is, you have your unfair advantage. You can talk publicly about just the things that you're excited about, your story, your why, your evidence, all this stuff. You're not soliciting capital and you're building momentum.
Thank you. So let me ask you one more question. So this question is about marketing. Do you believe personal branding is just marketing, or is there something deeper that actually impacts investor psychology and connection?
Yeah, I'm the wrong guy to have a psychological conversation about this stuff. I just know what works, guys. I'm not going to be able to like cite Freud and cite like this conscious versus the unconscious mind. I'm not that guy. I can just tell you that when people agree to meet with you, if you have a good presence online and they can see a video or an interview or a few things that are pulling in a certain direction with a theme, then that their level of trust and certainty in you will go up 10 out of 10 before you actually have that meeting. And your investors, if and by the way, all of you, some people are like, well, Marcin, if you're so great at this, why do you teach it? Well, because I believe in abundance. I don't think that me teaching you how to do this means I'm going to raise less. I don't care. I'm going to attract a certain type of investor, period, end of story. You're going to attract a certain type of investor. Your investors may not like me, but they'll love you, or vice versa. It just but by being authentically you, they know who they're buying into, right? So that's why your unfair advantage is so important. And by the way, whether even if you're not raising money and you're building a gym or you're doing something else, having your unfair advantage is the thing that's going to actually get people to know, like, and trust it. You guys ever meet people where you're just like, I want to do business with her and I don't even care what she sells? I've bought cars, I've bought furniture, I've bought all kinds of random stuff from people I just like. I got a garage full of shit that I just never because I just like certain people. I just buy stuff from them. I want to be in their orbit.
That's true. And I love
That's
your
your unfair
abundance.
advantage.
Yeah, I love your comment about the abundance mindset. And I believe in that 100% because I just feel like there's so much fish in the ocean. There's no possible way that one can fish all. There's plenty for everyone. So people they are thinking, oh, okay, this is my cocoon. I'm just gonna let only this people in and nobody can talk to them. This guy. That's just like very kind of narrow-minded person or personality right there. So by doing that, you're limiting yourself. But
Yeah.
having abundance mindset or giving back to the community, you see the magic happening in front of you, then you know how it's coming back to you. That's what I believe in 100%. So if you have any questions, guys, please ask. Marcin is here and we love him. We love his energy. We love whatever he shared with us today. So If you don't have any question right now, you can feel free to connect with him. And I think Aaron already added the contact information. If not, Aaron, could you please again share the link? And Marcin, you still have the QR code up, right? If you can share with everyone again.
Oh, sure. Yeah, I can share it one more time here. And then Vinky, I'm gonna have to get going here in a little bit just because I've got something that I need to take care of, if that's okay.
Yes, that's perfectly fine. And I'll share the QR code, and I think we do have the link in the chat. Please, guys, go ahead and connect with Marcin or fill out his formal interview process, whatever he has to figure out if you are interested in joining his program. Once again, Marcin, thank you so much. Such a powerful conversation as always. Every time I connect with you, I learn something new from you. Thanks again for doing that.
Appreciate that.
Yeah, and once again, everyone, chat is there. And earlier I was saying I do have a deal in the pipeline. So if anybody's interested, you can go check that out as well. I'll put a link in the chat as well. If there's any interest, you can feel free to reach out to me. And if there's no more questions, we can call it a day. And we'll see you guys next time with another awesome guest. And until then, stay inspired, stay intentional, and keep building your wealth. And thanks
Awesome.
again, Marcin. So good to see
Thanks,
you.
Vinky.